Good afternoon and welcome to the end of day review for today. And today is April 22nd, 2024. It's Monday and it's the first trading day of this week. And this week we have a GDP data come out on Thursday. So we're gonna watch very carefully on Wednesday how we're gonna set up for the data release right there. Yeah, because the last time around, like last month, we see a huge move. In that case, move up when the GDP data release the 25th. Right, last time it released on 28, and we go to the 28 right there. On the 27, we see the huge move up. So we want to watch, see if the same thing happens. So we can catch the move right there. Yeah, so that's the idea. So look at today. We see that the market is stop, the sell-off for today. Well, when we first look at the daily, here the screenshot we check. Yeah, let's see last time, last month when it's released, on 28, want to see how the market moving. Uh, 30 day, right? 30 day, and we have no, we want 30 50 minutes. So we want to be 28 with 27 right here, 27. So 27 right here. You see at around the last hours, it's right here. On Wednesday, the day before the GB data read on Thursday. Yes, so last time we see the last hour on Wednesday, it really make a huge move right here. So we're gonna try to do the same for this Wednesday to see how we can catch this move. See, that's last, at hour 13 right there. The last hour, it really spiked right there. So that's the idea. So we're gonna watch this Wednesday. See. Alright, for today, before we go in the pre-markets, we saw a gap up right here. And we want to look to see if we can apply the ICT model. Right, for the AM, we don't see the Euro swing. Do we see the Euro swing? Do we see the Euro swing? Before. Let's see if we have a Euro swing. I don't think we have a Euro swing, but let's see. Euro swing is the run up after London. Check the London. Check the London high or low. That's the idea. So it's from 2 right here. So from 2 to 5. Yeah, we have a little bit. Okay, check out. Yeah, just a little bit, but it. So check out the London high or low. So the London really not really consolidate. Let's see. Yeah, you want the London is cup consolidate. So yeah, it's I don't think it's gonna fit this model. Yeah, we don't think it's fit the London swing shooter, but just take a look carefully. Yeah, right before 9:30. Yeah, we can have a cap up and down for 9:30. See that? You can consolidate right there. It's not really a swing. So that means we don't have the model 2.1, but the model 2.2 we may have it, right? 2.2, which is a gap. Let's see if it fit into the model 2.2 right here. Two point two right here. Which is a gap down. Yeah, gap down. The gap up right here. So we thought that it's gonna go up and rate the previous day, PM buy liquidity. So this model gonna be massive model, but it did not. It went down and it refilled the gap. You see that? So it have a swing right here, Euro swing, but the Euro swing in this case is from 9:30. You see, it's not straight swing, it up and out, but it can be a Euro swing. If we look at this, so this model is not working today. So look at this model, swing right here. So look, mark the high from, take this liquidity. We thought that that model may be the model number one, right? The Euro swing from 9:30. We thought they're gonna rate the previous day right here, the PM liquidity, but it did not rate neither. You see, this the PM from 1:30 to right here. Yeah, it cannot rate. So but basically it move in this range. Move in this range. So we're kind of reluctant to trade along today. But right here, when we see this, we make two. I think we make a dog 3, 4 trade, or actually 5 trade. So when you see is break down here, right? We thought they're gonna be a 4 breakout, so we would have buy stop here at the Q1, and then we got stop out. We put our target is 15 point. We reached 3. We reached 5 point and reached 15 point right there, but it couldn't go hit our targets. It's retracement, and it hit out. I think we did have a screenshot. So right here we go in. Yeah, so we go in at 9:30, and we put our buy stop right here at 2023. Because right here we see this level right there. We going right there. So we think it's a full breakout, because we see that this level is whole and you have a gap up, gap down, gap up, and we believe this just a retest, and you see that rejection, and this one also rejection. So we thought we were on a good shape, so we put our stop loss, target all the way up here on 50.47. That is our first entry right there. But on this entry, we use on just a paper trading. We didn't trade real, so we just tried out, and we thought we got it. But you look for the next 30 minutes or so, we got stop out. At first we got the profits, but it not hit our target, so we still put our stop loss right here, and we got hit. But anyway, it's a practice for it. Anyway, we do the paper trading when we take this trade. And let me see what else we have. And then I think we go long one more time. What happened to our system? 45. But I think let's close out all of this. All right, so we got in at 9:30. You see that, and then after that we got stop out on this. Right, we're going 25, and then we got entry one more time again, go long, because we thought this is a full breakout level. We did 20, 50, 20, 50 right there. We get in. And you know what? We got stop out one more time. One more time, we got stop out. And that's we tried 3 times, but this time we trade with a real account. We trade with a real account. So we going at 9:30, right? We got stop out on this, and then we try to go in again at 11:30. 11:30 right here. Yeah, okay, so we are good on 11:30. Is that 11:30? We got 11:30. No, 10:45. 10:45. Yeah, we'll go long 10:45. 10:45. Okay, yeah, we go along right here. 45. Yeah, 10:45. We go along and 10:45. It doesn't look 10:45. Hold on. We got it right. 10:45. Where is our 10? Yeah, 10:45. 10:45. We go along after a big 10:45. Do we got the time right? 10:45. Doesn't look right. Well, 10. Very strange. 10:45 right here. So why this one is not 10:45? Are we looking at the same chart? 10:45, 10, 30, 45. Oh, so where is that? Oh, what is the candle before that? This is 10, 20. It doesn't look like a match, but that's what we take picture. We take the screenshots. But anyway, we go in, I think 11:45. No, 10:45. Oh, right here, 40. Yeah, maybe. 10:45. Oh, man. We're sorry. We look at the 5 minutes. We take the screenshot on the 15 minutes. No wonder. Anyway, yes, so sorry for the confusion. No wonder we say not smash at all. Alright. 10:45. Yeah, we go in right here. At first, we thought that big star reversal right here when it opened above, but actually it make another down move. So we got stop out one more time. Right, we're going at 9:30 right here. We got stop out, and then we're going at 10:45. Got stop out again, and then this time we get our luck. We try again, but in this time we didn't go in a perfect right. If it's perfect, we would right here. We would buy stop right here, but we didn't. And we got something to do. We had to step away for a while, for a couple of minutes, and we come back. We saw this already broke the level, so we go with the market order, because at that moment we saw the momentum. We haven't seen this kind of candle for last couple of trading days. The engulfing candle is really very quick response right there. So we're comfortable, even though it's not a perfect entry. And it is a lesson, sometimes you see the setup, the momentum, you don't need a perfect entry, because that's where the liquidity money draw. And at that moment we look, we see, wow, the gap is filled. See that? The gap filled. And then also we look on the NQ, we see the gap on the NQ filled, even though the gap on the ES is not completely filled, right? It's just almost there, but the NQ is filled. So look at the NQ at that moment. Okay, you see the NQ right here. Yeah, you see the gap on NQ is filled. So basically for NQ, it make a lower low right here, and for the ES it make a high low. So there's some diversion, smart money diversion right there. That's the reason why we take the trade right here. I think we get fill around 20. Yeah, 50-20 right there around here. Even though it's not perfect, 6 point above the perfect entry, but we good with that. And we put our target right here at 47, which is a key level. A key level. If we look on the what's going on right here? If we look on the key level, we got some kind of malfunction. We cannot. Right here, we see on the 1 hour time frame. You see last time it broke that level and retest and it fell. So we aim our target right there, and it did hit that target for us. It go before that, we far beyond that. But we learn our lesson. We can put the target here, or we can put a target of the Friday high right here. We have a Friday high right here. See that Friday high? It can hit target Friday high also. Because if we look on the right, if we look on the daily time frame, we can see that if it reversal, it gonna test the prior day high right there, the prior candle. So the next candle, it can be what? It can be go and test the low. You see all the candle right here test the low of previous day, test the low, test the low. This one test and close below. This one also test and close below. This one also test and close below. But this one did not. This one is open above that. And we see the setup, it fill the gap and then it diverges with the NQ. Then we know that today it's gonna be up close and definitely it's gonna retest the high of the prior day right there. So that's another setup that we can use to define the targets or the direction or the bias from the next day based on the prior day. And I think one of the guys on YouTube, he explained it very well. Next time we can cover that also. He come up with the theory, and other people come up with theory, the same idea. It's just called candle range theory. So basically it's the high and low, that's it. It's just the same concept right there. Okay, so we go in right here and we let it run right there. We have a huge run, so we have a huge win about 25 point. We ring about 25 point. Yeah, I think we go in around 20 right here. Right, we're at 26 point. We lost the first trade. The first two trade, the first trade we use the paper account, and the second we use the real account, and we lose 5 point, which is $250. But then the second trade we have a huge run, so we gain our back and we make a decent profit for today. Come on, what happened? Yeah, something with this account. Yeah, so right here we the first trade we lost, but the second trade we recover. So we are in the green territory right there for the challenge, $50,000 challenge, and the target is 3,000 profits, and the stop loss is 2,000 stop loss. If we lost 2,000, then we're done. And they give it a whole month, so we don't need to rush. We can take the whole month. So with like that, we can have a lot of time. For a month, we only take 4 trades like this. We can hit the target right there. Yeah, or the only So that's a very good practice for us. Practice patient. We don't need to trade every day. We just wait for the setup. The setup for today is perfect. And we heard that all before, the cliche, right? And we don't know it until we really do, and we see that when we don't patient, like last 2 weeks, we don't patient. We trade, we take every move, and we we make a huge loss. But just all the paper money. If real money, we will pay big price. But at least we practice, so we know how we handle ourselves. So from today, we learn the huge lesson. Hold on, give us just a second. So yeah, that's the beautiful thing. We start out the week with a really good momentum right there, and we saw a beautiful setup today because close the gap, and you see that it really should reach back this level. It tests on Friday, and also this level right there is on low time frame. You see that's the low of the Q1. It broke through there, and then it hold from there. And today, even though the pullback, it will never touch these two levels. And when we see that, we go in right away. We go long, and look at that huge 3 hour, 1, 2, 3, an hour time frame. So we have a decent run right there. And I think we want to show you something. Anyway, we want to go a little bit short for today, just 30 minutes, so we have something to get out here. So, but what we want to say that when we are patient, the opportunity like this come to us so much easier, and we don't have to chase, and we don't have to seek in discomfort or pain at all. It's so easy right there. But the problem is that we need to be patient. We just cannot be very impulsive and take every trade. That's the recipe for disaster, because when you do that, we let our FOMO, which is the emotion right there, is take over, and we try to swing every candle. That's not good. We have to wait for the moment. And I think one of the good idea that we use the previous day range at a bias, right? If I think the guy we already mentioned that before, but I mention again. So basically, based on the previous day high and low, we can pretty much give up more than 50% probability where it's gonna hit the high or it's gonna hit the low here. So for today, you see that it hit the high, but it's not close above the lows. The high. But right here, you see the breakout level right here. It close above that level. That can be a bullish signal right there, or all the way around, it can be a setup for short. If possible, if it's short, then we know it's gonna retest the low. So the previous day can help a lot. Friday help us a lot for the next day. So that's why we need to patient wait. We're not gonna chase every candle on 15 minutes. When we start out, we use 1 minute, and then we go to 5 minutes, and now we go to 15 minutes, and we feel much better because that will help us to reduce the mistake we make. And most of the time that mistake we make because we over trading. We over trading because we look at the low time frame. We just see everything is a swing. We just go in and take it. But if we are reduce the time frame to the high time frame, in this case we reduce to 50 minutes, and then based on daily 4 hour, 1 hour, that will help us to see a better picture and manage ourselves much better. So that's that direction we're gonna head into, and we will try to make improve every day. That is the recipe for success right there. We cannot overnight become a successful trader. That's not an inborn talent, but we can learn. And the only time we can learn is that we make mistake and then we improve it. That's an idea. All right, we got to go by for now. So thank you for your time and interest. We're only grateful for the opportunity. We do what we love, then successes come to our way. Bye for now and have a great evening.